really back? Well, reports seem to indicate that is the case. In the Mumbai metropolitan region, one of the leading markets that are watched to get an indicator of how the real estate industry is behaving in India, registrations of properties have been at an 8-year high as per the actual registration data compiled by a couple of agencies. That's not all. There are a number of reports now doing the rounds and have been released saying that there has been a robust increase in registrations, in sales of properties, housing and commercial as well in the last 3 months. So what are we really seeing? Where is this demand coming from? Is this pickup being pushed by incentives which were put out, for example, in the state of Maharashtra, where stamp duty was slashed? On the other hand, you had real estate developers as well coming in with very attractive offers and incentives. Your interest rates are at an all-time low. And then, of course, that theory that in the middle of the pandemic, a lot of people decided that they want to go out and buy houses, have some sort of security and comfort. Well, we don't know if that is a factor or not, but as of now, things seem to be looking good. The question is how sustainable it is. So a CRISIL report from a few weeks ago also underlines this trend of recovery, but questions sustainability, making the point that over the next few months and into 2021, we may see a drop once again in sales. So to get a holistic picture of where we are on the real estate sector, I'm pleased to be joined today by Anshuman Magazine, who's the chairman and CEO of CBRE India. Anshuman, great to have you back on the show. Hope you are doing well, and it seems things are good in your sector. Business is good.
Thanks for having me. Yes, things have picked up, I must say, especially, I would say, since the month of September. We saw acceleration, which was a pleasant surprise. And I think you already mentioned most of the reasons. As far as I'm concerned, the top two reasons would be, one is that developers have offered incentives and payment, the structured payment schemes where it makes it easier. So if you add all of it, the cost or the value of properties have come down. And number two, an extremely important factor is interest rates being, mortgage rates being the lowest since last 15 to 20 years. We have not seen such low interest rates for, like I said, almost 15, 20 years. I think these two are the main factors which is driving the interest. And the third, of course, is there's a pent-up demand. Not much is happening for so many months. It could be COVID fatigue also. And also people do want to buy houses, a sense of security itself, and there are a lot of young people in the marketplace. People are upgrading the kind of places they're living in. So there are many factors, but I would say the top two factors would be that the value of properties has come down and interest rates are at 15-20-year low.
Anshuman, I just want to go over some of the data that you have shared with us and that CBRE has compiled, where you're talking about an 86% jump in housing sales in the top 7 cities between Q3 and Q2 of 2020. Now, this is calendar year quarters you're counting. And Q2 then would be in the midst of the lockdown and pandemic. So Q3 would naturally have a very nice boost. But if you were to compare Y on Y, to say Q3 2019, how do we stand? Do we have a clearer picture of where we are, say, compared to last year?
No doubt. I totally agree with you. The base is low. That's why it is showing a big jump of 84%. But it's still a big jump, and we did not expect that it will be such a massive jump. Of course, albeit with a low base, because during middle of the year, COVID was playing a havoc. I frankly don't have the numbers on top of my head year to year, but the fact is, year to year there will be a reduction because obviously there has to be impact of COVID, and there has been, it was a lockdown situation, but year to year certainly there will be a reduction compared to 2019. Yet we are going to close the year at a much better note than was expected. When we were in April or May, it was all gloom and doom, And whatever numbers you've seen in last quarter and this jump of 84% was not expected. So we are still better off, but obviously uh, COVID has it impact, and we would not be close to what the 2019 numbers are.
Yeah, so I mean, just to give some perspective to our viewers as well, because that's the thing with data. It depends on the way you want to look at it. So Crystal says that the full year decline year to year would be close to 40 to 50%. They're talking about top 10 cities, and they do also talk about how there has been quite an improvement over the last few months. But they have a question of sustainability, where they say primary sales may also decline up to 50% in top 10 cities. Do you see any concerns coming up in sustainability? Of course, pent-up demand will take you far to some extent, as will freebies, as will incentives like lower stamp duty. Fence sitters might decide, well, this is the right time. But do you think that there is a sustainable sort of model which is evolving?
It depends on how you define sustainable, to be frank, because I believe it will be sustainable, but not at the pace we have seen in the past. When the market was at peak many years back, people expected every month the sales to go up. I don't think that's going to happen. I think this is sustainable at a pace which has to be realistic. It will be cyclical. So, for example, a lot of the stamp duty reductions may not be there after March 21. But the fact still remains that the economy is slowly picking up, the sentiment is moving. If the vaccine comes in, that will give confidence to people. The stock market is at all-time high. Relatively speaking, not as many people have lost their jobs as was expected. So all these factors, and the interest rates don't look to be going up again in the near future. I mean, interest rates can move, but they're not expected to go up in the near future. So and the developers are still offering incentives, and we don't expect the real estate prices to increase too quickly. So all these factors will help in sustaining the markets, but it will not be it will be at a realistic pace, is what I would say.
Um, what has been the contribution of the affordability factor in this improvement in sales? And I'm quite excited about the post-September numbers. We're talking about the MMR numbers, and that being at an 8-year high. Registration is quite a concrete set of data because this is actual properties that have been registered. So do you think that affordability has contributed to this? There are some estimates that prices have gone down as much as 35% in your major cities, especially Mumbai.
Like I mentioned, affordability, as far as I'm concerned, would be almost the number one reason. Because for a lot of time, the market has been slow, but the prices really didn't come down. The prices were flat. In even the best locations, they've been flat. In other locations, they've dropped. And it's not dropped only because per square foot, price has gone down. It's also because all the incentives which have been given, freebies which are coming along when you're buying an apartment, the structured payment itself is a major, major attraction. So price has no doubt been the major factor. But added to the price, like I mentioned earlier, the low interest rates do play a major part. It just makes it more affordable for more people. It makes it affordable to buy a house, because obviously your EMIs go down, and more people can invest. So I think no doubt these two are the key factors, price being a major one.
What are the trends that you're seeing, Anshuman, in commercial real estate? The last time we spoke, you talked about how you expect a recovery in commercial real estate. You were seeing some beginnings of it, especially in markets like Bengaluru. Now that there is a clearer picture about work from home, especially in large companies extending for some more time, there will be a wait for vaccine rollout, etc. Are you seeing any more solid trends there?
I no doubt there is more movement in the commercial market office space, and just like residential, there is a reduction in overall leasing this year compared to last year. Last year is not a good benchmark because that was the best year ever in India's history. That the amount of space, like more than 60 million square feet of space, was taken up in one year. However, going forward, I do do expect the pace of recovery in office space would be faster. And the main reason is that global economy is slowing down. As you know, the office market in India, the majority of occupiers are large multinational companies, especially American multinational companies and others from Europe, etc. And all these companies will be pushed to reduce cost, become more cost, optimize their cost. And for one of the major reasons for doing that is outsourcing and offshoring. And India is the most established offshoring destination of the world. So what I expect is it'll be slow because it doesn't happen overnight that the company starts rushing in. But already what we are seeing is that more and more companies, especially in the US, are looking at India again. I mean, they've never stopped looking at India, but the interest is starting to, increase because they've realized that if you look at a lot of the top Fortune 500 companies are already here doing well, have been here for many, many years. So it's not a new country for them, have a track record of delivering service at a low cost. And I expect more offshoring, outsourcing coming to India, which will benefit the office market. Our costs of people, we have talent, which is extremely important, and we have a talent at a competitive cost. And those costs, even if the wages have been rising in India, but thanks to rupee depreciating, the cost of labor has not gone up. If you look at cost of real estate, again, it's been flat. And if you look at in dollar terms, it's actually come down. So overall, it's cost efficient. You've got people, and I'm quite, optimistic in the office market recovering. Again, it'll happen at a pace. And then you already know there's big investment through REITs as well as individuals who are coming into the market. So yeah, certainly the office market, is going to recover. And I'm quite optimistic about that sector.
What is your sort of forecast for the last quarter? I know there's some time before that data will actually be compiled, but since we're speaking close to the middle of December, what has been largely your sense, especially in the residential space? Are we looking to sustain what you have seen in Q3? Has there been even a bigger improvement? And which categories are really buzzing?
See, in residential, there will be improvement. Part of the reason is, it is a small reason, but surprisingly, the registration figures show that it does impact is the stamp duty, and because there is a deadline or a timeout for that, it will get restored to the previous higher stamp duties. I do expect that there will be more what you call sales done, so it is expected to be better than Q3, and the sectors, the categories really are, if you look at across India, 45 lakh rupees to 1 crore is one category. In fact, I would say from even lower than 45 up to 1 crore, if you look at the sales, 80% of the market sales is up to 1 crore of apartments which get sold in India. So, and we would continue to see the maximum movement there. Of course, what we also see in markets like Mumbai, that some of the luxuries part of the apartments has also improved, although their sales are always slower, but they have also improved since last quarter. But the main play would be up to 1 crore ticket size, where we will continue to see activity.
Absolutely. Well, thank you so much, Anshuman, for joining us today and checking in on the health of the real estate sector and really giving us a candid reality check of what is going on. So there has been an improvement, no doubt, but we aren't near last year's levels. That's also important to remember. The good thing is that home buyers, especially those who are sitting on the fence or who wanted to make a decision, are being given the right impetus with a mixture of low interest rates, better prices, and some kind of discounts on stamp duty, etc.